moving to agentic, what gets fundamentally rewritten? This is a controversial answer, I think. I think, in a way, agentic, I'm going to be more aggressive because at the end of the CES, attacks actually the traditional agency model. I mean, which is built on strategic, creative, media and production. So it's sort of upper funnel, mid funnel, lower funnel. And I think the move to agentic, or more generally AI, means that strategic and creative is under attack. And the big question is whether it survives this attack or doesn't. Because a lot of what you're seeing at the moment is mid-funnel and lower funnel. The models that clients are adopting either have a sort of full-throated traditional approach, or they have a much more layered approach with strategic and foundational agency. So I think it's the move to agentic is fundamental, and it fundamentally challenges the model. So whether in a short-term world, because listed companies, private equity companies, venture capital companies, their hold periods can go from a quarter to 5 years, which is relatively short-term. So everybody is short-term focused. They want results quickly. And the upper funnel brand building will increasingly come under attack. I mean, the piece of advice that we give clients is agility, take back control, and first-party data. All of those things are really orientated to being much more flexible and much more responsive in the short term. So the sort of the angst that the industry is going through in the traditional, the 300 billion of the trillion that is traditional free-to-air, which is going backwards, as opposed to the 700 billion which is going forwards. I mean, subject to all the capex they're spending, the 550 billion they're spending this year, the hyperscalers, means that the fundamental model is being questioned. So disruptors like Monks, which is our operating brand, obviously have a huge opportunity. We just came from one of the platforms who were saying that they find the independents much more agile, much more flexible, much more responsive, the holdcos, which maybe was tailored to the fact that they were talking to us, but it's nice to hear because it may be true.
Well, do you push back on that short-term thinking, that short demand for short-term results?
Well, I don't in a sense, because I think it plays to our strengths. But on the other hand, I do believe that brands make the difference, and you build them with a mix of skills around strategic, creative, production, media, that should be brought together. But I think it's an era of great change. When you look at the holding companies, there are now 5, and you could say 4 of them, maybe 3 of them, are going nowhere at the minute, going backwards. One of them is sort of flat to up a bit, and one of them is doing better. So the 2 that are doing better, which happen to both to be French, which means there must be something in the water in Paris that makes it sort of agentic resistant, means that they're doing a bit better, but they're taking share from the others. But the industry as a whole is flat. I mean, it's a very strange time because I've been doing this for a long period of time, and the tightest correlation to agency revenues was corporate profitability, and corporations are doing very well. S&P 500 is up in Q3 of last year by about 12%. Exclude the hyperscalers, it's 9%. The forecast for this year from Goldman and Morgan Stanley are mid double digits, so 15%, 12, 15%, that's 12% certainly Goldman. So it's relatively good. I mean, people would give their right arm the scale of those companies to be growing at that sort of rate. So it's sort of a strange, it's almost like a twilight zone at the minute. Whether it straightens out, the hyperscalers are spending $550 billion, 35% up on last year's capex spend. Whether that will continue or not, the rate of growth won't continue, but whether it will prove to be like the railroads, an over-expansion or not, we'll have to wait and see. But it's a strange time.
Strange time, So what is driving that strangeness, and particularly looking at things like retail media, CTV, e-commerce, retail?
Well, those are important. We did a session here with Walmart, and obviously they're in session. But you can't get away from the fact that there are 6 platforms that drive. All this stuff about fragmentation of media drives me nuts, because media isn't fragmenting; it's concentrating, right? So you have maybe the industry was $1 trillion in 24. Maybe in 25 it was 1.1 trillion, because it grew by about 10%, mainly from digital, or only from digital. And then this year maybe we're 1.2. So last year maybe digital was 800 billion, and traditional about 300 billion, maybe a little bit less, or 1.1. And traditional was going backwards, Ergo, WBD, and Paramount, which is like IPG and Omnicom. You've got 2 agencies that make them one. You've got 2 studios, let's make them one. So you've got capacity issues in that part. On the digital side, there's tremendous growth, 10, 15, 20%. But obviously the switch to CapEx means there's probably less marketing spend. You see that with some of the platforms, particularly at Meta, for example, which has cut back quite significantly. So, I think it's just probably it's a transitional thing, and maybe, hopefully, the model will reassert itself once things have sorted out. But I think the industry is going to be quite different. Certainly going to be less populous. There's going to be fewer people in it, because in visualization and copywriting, in personalization at scale, media planning and buying, the need for the same number of people is being diminished. Omnicom and IPG have shrunk from 127,500 people to 104,000. They're selling off 6,000 people, figuratively, but so it's really 127 to 110. But that's in a year, and that's before the deal took place. And there'll be more so-called synergies, which is a euphemism for firings. But that's before AI takes hold, and certainly we're seeing in the 3 areas I mentioned, and in general efficiency and democratization of knowledge, the general drift is to the sort of Palantir, we'll quadruple our revenues with the same headcount or maybe even less people.
I'd like to take that point you made about media fragmentation maybe being a misnomer or just mistaken.
No, I think it's a mistake. Yeah.
How
job of the CMO's got simpler, not more complicated. I'm a hate figure for saying that.
It seems like a contrarian view. What do people misunderstand about?
Well, just look at the numbers, right? Maybe it's because I was a finance director. If you take the trillion, so it's easier numbers. So 300 billion is in free to air, and that is pretty fragmented. But the 700 billion, which is the guts of the business, Google's 250, Meta's 150, Amazon's 60, TikTok outside China's 40. So you add that little lot up, that's 500. So it's half of the trillion, or 5/7 or over 70% of the digital. Don't tell me that that's more fragmentation. I was on a radio program with a woman who runs a trade association, PR company. I got myself into a lot of hot water because I said there is no such thing as PR. But she was trying to defend PR. But trying to separate, it's a specious separation, because they're all marketing agencies, whether they're advertising agencies or PR, and they're all hiring storytellers. They're all hiring creative directors and media directors. The whole thing is morphing into one. These are brand agencies or marketing agencies that are doing strategic, creative, production, and media.
So if you were starting S4 Capital today, what solution in media or advertising then would you build first, and why now?
Well, I think the 4 things that we built S4 Monks on, digital only, data-driven, faster, better, cheaper, and with AI more, because we can do it at greater scale, plus a unitary brand, still hold, maybe even more so. When we started 8 years ago, AI was a sort of twinkle in the eye, or maybe more than a twinkle in the eye, but it was in its earlier stages. It's now full throttle, not being full throttle implementation yet, but coming. So I think those things still hold true. And the unitary thing is interesting because, WPP will announce its new strategy. What's going to say? We want to be one WPP. Publicis is one Publicis. They're all trying to, Omnicom wants to be one Omnicom, Omni. Havas wants to be, a village, one Havas. I listened to Yannick's presentation. Havas is 200 years old. He's not 200 years old, but Havas is 200 years old. So, and it started with carrier pigeons.
So much for fragmentation. That is the consolidation.
No, I think, and then the other point, of course, is that the hyperscalers, particularly the four, throw in Alibaba and Tencent, you've got 6 platforms, 3 Western, 3 Eastern. The hyperscalers are spending about, as I said, 550 billion this year on AI implementation, data, energy, etc. So they're going to reinforce their position. So there'll be Musk. Obviously, Microsoft is doing about 19 billion of media. Apple about 11. But then you drop down to Snap at 6, and Walmart maybe at 3. I don't know where they are. So you're really talking about it concentrating in 6, or maybe if we threw in Microsoft and Apple, that'd be 8. You throw in NVIDIA, you throw in Salesforce, Oracle, and Adobe. That's pretty much the ecosystem. Add Musk, of course. Yeah.
It's all part of it.
ChatGPT is really Microsoft,
right? So
yeah. So
wow.
it's really quite a tight ecosystem, and these are, as the head of MI6 finally caught on to what I've been saying for a couple of years, which is these are nation states. If Google is now 4 trillion. Of market cap, almost the second most valuable company on the planet. NVIDIA having been 5, a little bit less than 5 now. So these are countries, on their own as countries. They'd be, you'd have US, China, so 28 trillion, 18 trillion. Japan, I think, is what, 5.5, 6. So they're almost countries, as big as Germany, as big as India. Bigger than the UK, bigger than France, bigger than Italy, bigger than Spain. So when the head of MI6 says, Tim Cook is president of a country.
So what does that say in terms of the things that you're looking at in terms of managing the business, throughout
I
this
think
year?
you have to focus on those companies. I mean, we are digital only, or focused on digital. That is going to become more and more important. If the industry 2 years ago was $1 trillion, last year 1.1, this year 1.2, the traditional stayed at 300, so this year 900 billion. So we'll almost get to $1 trillion of digital within a couple of years. It'll be 85% of the market. So it means that focusing on those 6 platforms I mentioned, plus the others, Microsoft, Apple, etc., becomes more and more important, and building the relationship between our clients and those companies becomes absolutely critical, which CES is, screaming that out. And this year, I think what's really interesting about CES is it's more technological than it's ever been, right? And there's less about agencies. I mean, the agencies almost disappeared. There's no real Omnicom presence here or Dentsu presence. IPG obviously has been morphed into WPP Media maybe. Havas has come back after 10 years, but really the agencies have, I think the interesting thing about CES to me is the agency presence seems to have diminished. It's very private presence, not a public presence, and this has become more technological. This is more like CES used to be than, CES sort of moved towards Cannes, and Cannes moved towards CES, but I get the impression that CES is sort of going back again to being not purely technological, but very focused on technology.
So do you think that's
robots and drones and God knows what?
So do you think that's healthy for the?
No, I think what it signals is like the answer to the first question, which is that the role that agencies play is going to be markedly different. It's going to be a much more technological role. They are going to be much more technological consultants, and they better get to understand. You don't have to learn code anymore. AI can write it for you, but you have to understand it much more.